All right, good morning, traders, and welcome to the opening bell. Today is Friday, May 8th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to wrap up the week with you guys. Happy Friday. It's a quiet close to the week. We did get just the release of non-farm payrolls coming in way better than expected, 115,000. Market reaction has been a little timid, to say the least, at first here. Unemployment holding 4.3% as expected. Slight contraction in the participation rate. At the same time, you got the release of the Canadian employment data, which came in far worse than expected. Contraction of 17,000. Notoriously variable print, guys. So just to put that out there, dollar CAD though is extending that breakout that we talked about yesterday, approaching pivotal resistance. We'll cover all the US dollar crosses, gold, Bitcoin holding resistance, and a quick glance at oil. Any other questions or trade setups you want to review? As always, feel free to throw them on the message board. We'll be getting started in just a moment. All right, great to see everyone here in the room. Ahmed, Ashish, Daniel, Frank, James, Mesfin, Robert, the whole crew's here this morning. Great to see you guys. Here's the US dollar still holding the weekly range right at that December low close. We talked about 97.88. That's been the level we've been focused on, the December low close. Really nice pivot in price. This is the third day in a row we're checking it again. Momentum is sitting right there at 40. Certainly a continuation, a close below this pivot would open up the potential for a drop into the 618 retracement of the yearly range. That's 97.50. I think that's where you see a little bit more meaningful of a reaction if reached. All things held constant, DXY still sitting at support. Here's what the release looked like. You got that print of 115,000 for April non-farm payrolls, far surpassing the 62,000 we were expecting. Even got an upward revision from 175 to 185 to the previous month's print. So labor markets look pretty good. The only caveat was the average hourly earnings are softening just a tad. Year on year, we were expecting a 3.4 to 3.8, came in at 3.6. Same thing with the month on month, came in at 0.2 hold for the month on month versus 0.3% expected. So that and a slight downtick in the labor force participation. Obviously, you never want to really see that, but could be kind of capping the unemployment rate for now. Anywhere in the range of, like I said yesterday, guys, 60,000 to 100 is essentially, treading water, not treading water, steady as she goes in the employment markets, suggesting that we continue to have this low hiring environment. And that really puts the focus for the dual mandate from the FOMC back onto the inflation outlook. And if you look at the Fed fund futures, in fact, the next move markets are pricing in with a little bit more temperament is a potential rate hike. So again, it really casts a big question on how Warsh is going to take the helm at the FOMC and what that means for monetary policy moving forward. Certainly in this type of a market environment, and markets agree with me as finally, we've been saying this for months, that there's no room here, at least from an economic standpoint. There's no justification or qualification for a cut or further easing from monetary policy. You got record market, stock market, and inflation is still well above target for the fifth consecutive year. Employment remains pretty much in line. 4.3, I would say, again, you could debate 4.1 or 4.3, what the natural rate of unemployment is. We're basically there. So for the dollar, you'd think that would be supportive. Not happening, though. And certainly the commentary from the administration, at least the headlines this morning, guys, is that Rubio is saying that there's a potential that we're going to get a response from Iran with regards to the negotiation and that memorandum today. So markets are still waiting for that. Oil's kind of doing its own thing, gyration. Here's the US dollar still sitting right above that support. You can see it's trying to probe again below the next major level, the major key level we've been looking for since the drop, still 97.50. That's that 618 retracement. Now, initial resistance. Now, look back at that yearly open, which caught resistance yesterday. That's 98.24. Fact, not Mike Boutros' opinion. Bearish invalidation remains with the 200-day moving average. That comes in right around 98.55. We'll cap that right now for the top side in DXY. Here's what euro looks like. 1813, 1826, same level that turned the high last month is the key resistance zone. Euro needs to mount to really mark resumption of that uptrend from March. Till we get there, it's still constructive, but that's the major key hurdle. So what do you do from here? If you're holding long exposure, you're first banking on a break of the weekly range highs. That's basically 1826, 1813, critical. Initial support, I still would want to see initial support at the yearly open, but the monthly open comes in just a little bit lower, 1730. Wouldn't want to see anything below that on this specific stretch here for the euro if we are heading higher on this move. Key support, bullish invalidation, 1670, 1681. That doesn't change. 200-day moving average, 38.2 retracement, and that 100 off the high from last month. So major key pivot zone here for euro on the upside. That's the level that needs to break. Till we do, we're approaching resistance right now. Sterling looks like this. So whether this was a break earlier in the week or not is something I've been kind of debating, and I couldn't even make my mind up on it. We pulled back below that 136 handle. This is the British pound. It's notoriously professionally traded market, guys. You get lots of the throwovers, lots of the false break of support. It's just the nature of the beast. So this is yet another. This is going to be the fourth, not consecutive, but fourth day in 6 that we're trying to break above 36 on a closed basis. Look, the monthly open is 35.93. The August highs are there. The 618 of the yearly range is 35.98. All of it's right there. I'm sorry, the monthly open is 36.05. The May and August highs are 35.93. But you get the picture. We're trying this break again. Momentum, trying to make a break, solid break above 60 here. So the onus is on the bulls to get this drive. And if you get a breakout here, 36.85, the high week close for the year, 37.45, the 2025 high day close, the 2022 high comes in just a bit higher, 37.50, but right there, those are your upside shots. The weekly opening range is still preserved. We thought this was the break. We saw the kickback, so we'll include that Wednesday high, but you're basically looking for a breakout of this zone. You're constructive above the weekly low at 35.12. You need to break out of that high to mark resumption of the uptrend. The bears would need to reassert a 34.65 close down here below the yearly open, the February low day close, beautiful pivot in price. That's the break that would suggest a more significant high is in place and a larger reversal is underway. So that's what the bears would want to see. For the constructive, for the trend guys, for the late March advance to remain viable, this needs to hold support. You need to break out of this high here to get this thing going towards 36.85, 37.45. As always, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of the technicals here. So that's euro and sterling. They're actually the least sexy, if I could say, at this point. Aussie and dollar CAD look really interesting here. So our assertion on the Aussie was that the 72 break was legit. We talked about that on Tuesday. We had gotten a clear-cut break of a major technical barrier we've been tracking for months. The 100% off the low from last year, the 618 from the decline off 2021. Boom. We tried it twice. There's the breakout. Now, this advance is extending towards uptrend resistance. The next major level, 72.95. That's the 2019 swing high. Also converges, again, on uptrend resistance. That's your next hurdle. That's from the weekly charts, right? And we're about to cross overbought condition. Pay attention to this into the close today. So that's the weekly charts. You're able to make all those assertions. Here's the daily. Whoops. I'm sorry. Here's the daily. So here's the pivot, 72.08, 72.13. We got the breakout it was actually on Tuesday, but there's the Wednesday breakout for the candle. Pull back, hold a support, and here we are again. Next level up, 72.95. Just above that, 73.08 is the 618, extension of the advance off the November low. 1, 2, 3. Both of those converge, again, on uptrend resistance over the next few days, basically until like Wednesday, Thursday of next week. And that's all contingent upon a hold above and a stabilization above 72 here. Now, note that the monthly open is 72 proper. The 618 retracement is 7208. The 100% extension is 7213. You got a 13 pip zone of support right at the lows for the last 2 days. Here's the 4-hour chart. Yesterday, I tacked on this retracement off the lows. You guys remember that? 71.90. We said that's bullish invalidation. We wanted to see that hold if price was heading higher. I had this here yesterday. We turned right ahead of that. We literally tagged the monthly open and rebounded right off of. So it continues to keep that zone as our near-term bullish invalidation. Key resistance, 72.95, 73.07. Look for reaction there. This is a near-term slope. This is not the same slope we're looking at. You guys know this. I haven't changed anything. This is not the same slope you're looking at here on the daily chart and the weekly chart. This dates back to November. This one just dates back to the low from March. So also on this slope, the 75% parallel, one touch, converges right there. Again, basically into midweek next week. So the levels are very clear. If we're heading higher on this stretch, losses would need to be limited to 71.90. Next level up of resistance of significance on a break higher from here is 72.95 into 73.07. Make sense? There's Aussie dollar. By the way, after we went over the data, forgot to tell you. So for next week, we also do have key inflation data on tap. The consumer price index is on Tuesday. PPI, core PPI, the key one, is going to be on Wednesday. And then Thursday, we get another update on the health of the consumer with the retail sales print for the United States. So a lot on tap as we head into next week as well from the US. All right, that's Aussie dollar. Questions. Hi, Michael. On your earlier point that expectations of higher rates are increasing and yet US dollar seems weak, do you attribute this to larger structural issues like de-dollarization or just short-term quirk? So Dan, great question. And I think short-term quirk of current market conditions. Great question. I think we can't make that assertion, Dan, until later in history. As much of a cop-out of an answer that seems, it could be that this was the beginning of a larger dollar de-globalization. I don't think, or de-dollarization rather, I don't think, my humble opinion, I don't think this is it right now. I think the dollar has just taken a turn. We saw the dollar really continue to hold during the whole fiasco and the whole onset of the crisis. The crisis is starting to abate. Rates are, not seen as moving lower. That's right. They're seen as steady. I wouldn't want to say the expectations that everyone's baking in per se, expectations for higher rates, but you've seen that subtle shift in the Fed fund futures from the next move is going to be a cut to hold on. We're expecting a hold all the way through mid next year, and then the next move might be a hike, but we're only talking like 25, 30%, 8 months, 9 months out. That's not really something I want to bank on. So that's up for a larger debate, Dan, and that could be a larger discussion that we have. I think it's going to take a year or two down the road, but at the moment, I think this is just the unwind. Markets are looking past the Iranian conflict. Earnings have been good. You have a lot of opportunity for beta elsewhere. And while the rate outlook is shifting, I think that's largely been baked in. That we're not going to see sort of further cuts. I mean, I want to show you the daily chart. I'm sorry. This is the DXY daily chart. I think the onset that the market started to wake up that we're probably, the inflation picture may not be as rosy as we want it to be. And you've seen this setback. Don't forget, we've had a pretty dramatic rally off the lows from the year. But it could develop into something more messy if 97.50 breaks from a trend standpoint. Right? It's always good to keep the larger picture in view. Here's the DXY and the weekly. So jury's out on that, Dan. But an interesting thought experiment. I could go down a rabbit hole with that on you if you want sometime. Okay, so back to topic. That was Aussie dollar CAD. So we got the release of Canadian labor data. It came out worse than expected. Again, negative 17.7 thousand. The expected print was a positive print of 15,000. Unemployment upticked from 6.7 to 6.9. So you're seeing a little bit of a sell-off in CAD, dollar taking the reins here. Here's the picture. It's been very clear, surprisingly. Into the start of the week, I was getting a little frustrated. We were heading towards slope resistance. We didn't even quite get there. Then the kickback yesterday held right at the objective May open. That's 35.81. It's exactly where we bottomed out. The rebound broke resistance. And again, here's the confluence zone that I highlighted for you yesterday. I didn't touch anything. That's exactly where the marker was. The 618 retracement of the weekly range from last week's high, 36.50, converged on the 786 of the slope, right? That's the same retracement that caught the lows. We were looking for a reaction there, and we got it. Topside break, test former resistance as support, move right on. Next level of resistance is the key zone of the year. That's 37.25 into 37.33, the 38.2 retracement from the November high, the lows from July, the lows from September, the objective 2026 yearly open. All of it converge on the February highs right here. So that's your next key level. One little caveat, I'm just going to show it to you just because I'm a geek like that. Here's the 38.2 retracement at 37.10. May kick back, open up the range a little bit. I don't want to put a 20 pip zone of resistance, but that is something you want to, I would consider. That 38.2 is basically just shy of the highs we just made. But largely speaking, the big zone of influence is going to be this 37.30, 37.22 zone. Absolutely critical. So maybe a little bit higher to go. You are about to probe into overbought condition on the 4-hour chart, which keeps this, again, near term in favor of the bulls. Not a trade I would jump in on the long side from here to chase all day long. If you're holding long exposure, look for a reaction up there, a good zone to reduce position size, raise protective stops, get a little bit more defensive. If you're looking for new exposure, the whole name of the game for dollar CAD is what happens at that pivot zone. If we pivot and close above it, that's a major break. Again, naked chart, right? Forget all of this analysis. Boom. Look at the pivot zone along that slope. You can't make this up. So if we break above that, it might be calling for a test of that 52-week moving average, the yearly moving average near 38.15. All things held constant, resistance just overhead in dollar CAD. Questions on Loonie? One other thing, and again, just because I can't help myself, I was looking at earlier, if this slope is a near-term breakout of uptrend resistance, adds further justification if we break above overbought here to see that stretch towards 37.33. If you take a little bit more of a real near-term approach, like if you're looking at this at an hourly chart or something much more closer time frame, and you just use that low, it basically puts that slope right alongside that same level. So either way you look at this, I was dancing around with this earlier today. Here's the just to geek out with you. Here's 60-minute, and if you take a basic pitchfork like this, it puts resistance basically at a little bit higher from where you are right now, but into the Monday open, same right there. Now it's too early to put too much emphasis on this, and if you open it up a little bit, that gradient gives you a little bit better touch points along the median line. Again, you get the picture though, right? You get the picture. Not worth putting too much emphasis on, but the levels are pretty clear here on dollar CAD. All right, dollar yen. What's going on with dollar yen? I have no clue. Here's what dollar yen's doing. You're straddling the yearly open at 56.66. The rejection on this rebound to hold and stabilize back above 57.70 does still keep the downside bias on the near term. We talked yesterday about the IMF warning to Japan with regards to further intervention. I don't know if that's going to mean anything. Didn't see too many headlines on that release yesterday. So they seem pretty determined. Look, at the end of the day, the key support zone has already been tested, and that remains paramount. 54.78, 54.79 into 55.40, this zone right here. The objective low week close for the year, the 618 retracement of the yearly range. Both of those levels converge on basic trendline support extending off the lows from back here in April of last year. So you're at major support. Do the bulls want to tempt and the resolve of the Japanese officials and go long? That's a tough call. Do the bears want to front run and take a short while above key support? That's not pretty advisable either. So it's decision time, guys. The pivot off this zone is going to be determinant for the next major move in dollar yen, in my humble opinion. Break below this level would assert a move and an invalidation of that downtrend from April of the uptrend, from April of last year, from down there. And it would open up the potential for a much larger decline. Than just for a picture to keep things in perspective, the next major move to the downside, if this were to break, is 51.95 into 52.60s. Basically this zone right here. You're talking about the 2022 highs, the 2023 highs, the 38.2 retracement of last year's rally, and the 52-week moving average. All objective levels, not Mike Boutros' opinion, not FOREX.com's opinion. Fact. That whole zone converges on the objective yearly lows and the low close for the year. Like there can't be a level, a zone that's more stacked up than that. So that's the risk if this breaks. Momentum right at 50. So it's decision time any way you slice it. Here's the daily chart. Same slope, same zone right there. You can see the reaction that we got there on Wednesday when we responded to it. So not really I have no appetite for it. Not at this point. You're sitting at major key support. For a medium term outlook, if you're looking to put sort of like alerts on this one, a breakout of Wednesday's singular range should detail the next move, meaning this candle right here. Obviously, this is just above key support, so a downside break would be significant. This is just above key resistance, so an upside breach at this point, based on when it happens in time, would be significant. Other than that, you're going to see a whole lot of chop here. Be careful. Dollar Swiss sitting right at support. So we got that break initially of the weekly open, the April low day close, 78.16. We highlighted 77.72, 77.75. I put a report on this on FOREX.com earlier this week. We're still sitting there 3 days later. So we got dropped there on Wednesday, tried it again yesterday. Here we are again. Note, that's the 618 retracement of the advance off the yearly low. That's the objective April low. And that's the median line for this current formation that we've been in off those highs. That's the tertiary high from April. Caught the high perfectly here. Median line support, median line support, median line support. It's decision time also for dollar Swiss. Losses below this zone would open up a potential drop towards 77.30. That's the low week close for the year. The 786 retracement comes in at 76.98. Initial resistance, the monthly open and the April low day close. Okay, it's 78.16 to 78.13, 78.14 right here. Initial resistance, bearish invalidation, 78.75, 78.73. Clear setup there as well. Sitting at support into the close of the week is dollar Swiss. Okay, quick notes on gold. We are sitting right below resistance. So here's where is it? Here's gold. 47.42. Still the zone that we talked about 2 days ago, the 618 retracement, the decline off the highs from last month. We talked about the breakout of not only the weekly opening range and the weekly open, but downtrend resistance back here on Wednesday. That was the April open, a pivot nonetheless all month long. 1 touch, 2 touch, 3 touch, 4 touch, break, acceleration, resistance, break, another accelerated move, halted at the 618 retracement. We stayed constructive while above the weekly open, and that was 42, the monthly open. That was 42, what is it? 46.22 right here. So you got the pullback yesterday. We didn't even get a test of the April open. Here we are right back at resistance again. Look for a reaction here. If we do get the pop, key resistance remains unchanged, rock solid. That's the major pivot. It's up here at 49.10 into 48.55. My favorite fib confluence is 100 off the low, 618 off the high. It's also the highs from last month. So all is contingent on what happens today. Watch for another move here near 47.42. If we pivot and close above it, look for resumption. But if we don't, you still could get a little bit more of a kickback. Initial support 46.69. Still want to stay constructive well above the monthly open at 46.21. Questions on gold? Dan says, for what it's worth, Aussie CAD only 70 pips away from parity. Aussie CAD, eh? Let's take a gander. 99.28. What is 99.28? What is that? It's probably the high day close or the high week closed. Aussie CAD. It's the 2021 high close. You're at resistance right now. That's the first resistance pivot on that breakout, Dan. Good shout. Good shout. Obviously, I must have highlighted this for someone. I haven't, gotten involved in this. 98.17, 98.20 was the 2021 high week reversal close, and it's also the 88.6 retracement. Remember how I tell you the 88.6 works so well on the commodity block? I don't know why. Here's the perfect example of why that is. So this was confluent uptrend resistance and basic lateral resistance. So that breakout is legit. Momentum's an overbought. This is your first hurdle right here, 99.28. Literally, we're testing it right now, Dan. That's going to be the 2021 high close. So if you bring this into the weekly chart and you just bring it into a line chart, boom, that's the high. So first hurdle here, you're constructive now while above 98. Next level up, if you see a breakout, 99.93. That's the absolute high from back there in 2020. Really nice move. 2021, actually. Really nice move. Good shout, Dan. All right. So that's a nice little unexpected quick look at Aussie CAD. We hit gold. Bitcoin, real quick. So Bitcoin, the resistance level held that 81,038. Remember yesterday we were testing higher above it again for a second consecutive day. That's a hold. Okay, that's a hold. So the threat is for some kickback from here. It's still technically constructive while I know no one's going to like this, while above 70,283, way down here. Initial support is at the monthly open, which comes in line with that key pivot zone, which was resistance since February. That's 74,434 to 76,159. That's now that's now initial support, bullish invalidation, initial resistance. Next major hurdle on the upside, 83,712 into 85,273. Close lows from back here in November, stretch low from December, 38.2 retracement, 2025 low week close, all converge right there. So a little bit of a risk here to the upside in the Bitcoin breakout, potential for some kickback. Largely speaking, you have broken out of a multi-month downtrend, but you're testing uptrend resistance. So just take note of that. Okay, that's everything that I have on my list, guys. Do let me know if you have any other questions. I got about 2 minutes to spare. Not much to update on the oil move here, guys. We are kind of still waiting to hear back from Iran with regards to what kind of response they'll have. You've seen some pretty decent kickback. Yesterday, the rebound held 90.79, 91.78. That's still the support zone that needed to break. We talked about it on Tuesday. We hit it on Wednesday. We hit it on Thursday. That's still the pivot zone. Major pivot in price ever since that fiasco on March 9th. So look for a reaction there. A daily close below it would at least solidify or at least could lend further evidence to the assumption that a more significant high may be in place. And that'll open up the potential for a larger setback, potentially towards the low for April, which came in at a perfect level, 79.60, 80.75. That's the 2025 swing high, the high day close, and the 618 of that whole rally. So major level if this breaks, but right now oil's sitting just above support. If we buckle back above 101, 101.50, sayonara. Okay, we're back in trouble again. That's the panic level, has been and remains. Questions on oil? Keep your eyes on the headlines. I'll keep you updated on MB Forex if anything comes out that might be market moving. All right, with a minute spare, we'll go ahead and wrap it up here. Guys, have an awesome weekend. Stay nimble during this environment of headline-driven event risk. Just make sure that all of your risk is well-defined heading into the weekend. All positions that are open are well-defined risk and stops on all of them. And also your average position size, guys, here, just stay a little bit more nimble. We just got through NFPs, and we're heading into a weekend where we're waiting to hear a response from Iran. So have a great weekend. Best of luck trading today, and I will see you on Monday morning at 8:30 Eastern for the weekly technical outlook, full hour of updates on the reports we've covered over the last couple of weeks, and then right back here in the opening bell at 9:30. Have an awesome weekend, guys. God bless.